Hey, what's up, guys? Jordan Dove here again. Something came across that I wanted to share and get out there, and it's about home builders. And builders' confidence has fallen again. This just came out about an hour ago, and I thought I should get this out here, start sharing this information as it comes in, get it out there as soon as possible to you guys. This is my first time in my home doing this, and so whatever. Let's do it whenever we can do it, wherever we can do it. So, home builder confidence, guys, it fell 2 points in June to 67. This is marking the lowest reading they've had since 2020, and that's according to the National Association of Home Builders and the Wells Fargo Housing Market Index. This marked the sixth straight month of declines in June as builders felt the effects of the economic headwinds that are currently rocking the new home build and real estate sector. So get this, okay? Let's say 2 months ago you signed a contract with a builder when rates were 4.75, 4.75%, and your home is scheduled to be completed 4 months from now in October. Let's say that there's no delays, and trust me, there's been a ton of delays. It's taken 8 months, 9 months, 10 months, 12 months, but 6 months is kind of the norm. So let's say there are no delays, and let's say that you are financing the purchase of this new construction, and we're qualified for that purchase price that you agreed to with the builder at 4.75 back in April. But right now, rates are nearing 6.5, and it is likely that that same borrower does no longer qualify for that purchase amount due to the interest rate being almost 2 points higher. That's a lot of money, okay, over the course of the loan, and every year and every month that increases the payment substantially. So if you're using a builder's lender, they're probably not going to tell you this because you've received a copy of a loan estimate, the LE, and of course it's not signed. And the rate lockbox that's on the right corner will say rate locked, yes or no. Of course it'll be checked no. And that's because lenders cannot lock rates until within 30 days of the closing date. Now, there are some exceptions that can be made to get a 60-day lock, but guess what? That wouldn't be until August in this scenario, and where will rates be then? Do you see the type of problem that this could cause? Like, think about it. What could happen? Okay, so they're expected to move in at this time. They're packed. They're ready to go. Their landlord's going to sell their house. They're renting from their landlord. They have no other place to go. Now the builder tells them it's pushed back 3 months. Now they got to find some temporary living. Difficult to do right now. What if the builder says, hey, you no longer qualify, or they don't qualify? Now you're shopping with another lender. Rates are horrible, and you can't go back to where you were. I mean, there could be a lot of problems with this. Do you see where that's coming from, where I'm coming from on that, okay? So here's a quote I want to share from the National Association of Home Builders Chairman Jerry Contner. He said 6 consecutive monthly declines for the HMI is a clear sign of a slowing housing market and a high inflation, slow growth economic environment. Let's say that again. Clear sign. It's a clear sign of a slowing housing market in a high inflation, slow growth economic environment. Okay, so they're telling you that the housing market is slowing and cooling, which I think is actually a good thing. It's needed. 20% gains over a year are unsustainable. Back-to-back years, crazy appreciation, unsustainable. Have to get something back much more normal, 2, 3, 4, 5%, somewhere in that range. Okay, but we know that entry-level market homes have been affected in terms of housing affordability for first-time home buyers, and now builders are going to be even more cautious with building as the demand softens with higher mortgage rates. It's getting really interesting. So keep this in mind. Construction costs are increasing due to worsening inflation. So just everything else is going up. Why would not the materials to build property be going up? And I believe we are going to see some supply and demand challenges coming here very soon. This is all happening quicker than I anticipated. This is starting to happen like now. It's happening, so prepare yourselves. I think we are going to shift very quickly back to a buyer's market, which is going to be great for buyers because they're going to have that opportunity. If you are going to be paying higher interest rate, now sellers are going to have to come down one way or another. Okay, prices may remain stable for quite some time, but sellers are going to start giving concessions. They're going to start giving closing costs. They're going to start paying for your move. They're going to pay to break your lease. these things are going to start happening again, which was very common in 2019, 2018, 2017. We were able to get closing costs quite frequently for our buyers when rates were at 4 or 5%. However, the only issue was homes were not at the price they were, so they were still very much affordable. All right, so I wanted to share this story with you guys. And the issue that we're still having, as I keep telling you, is Wall Street, the hedge funds keep purchasing properties, but they're buying them in that middle class range that in my market, it's that median price range under $500,000. And we had a listing go on the market today, listed around $430,000. And we received one offer this morning or this afternoon immediately. And who do you think it came from? Who do you think it came from? Yeah, you guessed it, Wall Street. It came from Wall Street. This was actually the only correspondence we received on this listing today. And a few months ago, had this been a few months ago, that home would have been lined up around the corner and I'd already have 10 offers in my inbox. But I'm going to tell you, the market is shifting and it's happening fast. There's a broker in town. I'm going to go back to that offer, but there's a mortgage broker in town who's representing a company called First Key Homes, and they're still purchasing as many homes as possible. And I've received an offer from them on over 10 listings I've had this year, and all those listings that they did submit offers on were below $500,000. And if you just do a simple search for First Key Homes, it will tell you that it's a company that allows you to find houses for rent. Okay, great, people need housing, but let's look a little deeper into this. Who owns First Key Homes? And if you do a little search, it's not very difficult. The answer is Cerberus. Cerberus, that's Cerberus, which first formed the company First Key Homes in 2015. And it is said that this company provides acquisition and property management services to a diverse portfolio of single-family rental homes across the United States. All right? Pause right there. Let's dig a little deeper. Reported on November 19th, 2021, Cerberus Capital Management landed a $616.1 million CMBS loan from Morgan Stanley, which is a loan that they received for 5 years at a lower fixed rate, which was used to refinance First Key's 2,106 home portfolio at that time. Okay, the investment and property management firm counts more than 34,000 homes in its total portfolio. And the majority of that is involved in CMBS securitization. Okay, so typically when a company acquires a CMBS loan, it's a low interest, short-term loan with a balloon payment due at the end. And typically the company will sell the assets or refinance the remaining balance into another CMBS loan at a low-term interest rate for the next 5 years or 7 years, whenever that balloon note becomes due. But what happens, like in an environment we're in now, what happens when they go to refinance that balloon payment with rates when they're extremely high? What happens? Do they need to dump these properties? What happens if they're stuck on the books and they're underwater? Are they going to keep them in a rental? So what happens when they can't refinance that money? What if they don't have the capital to be able to pay that balloon in time? Really interesting. Do you see the issue that is forming here? But then again, you guys know how I feel about Wall Street and how they're monopolizing the residential real estate industry. But let's go back to everything. How do we know this company's Cerberus is, Cerberus? How do we know that they're Wall Street? Who owns it? Well, it's owned by billionaire financier Steven Feinberg, who is a private equity. It is a private equity and hedge fund firm that manages more than $20 billion. Yes, that's billion with the B. And Feinberg also owned DynCorp, which formerly owned it. I think he got out in 2017, but he owned DynCorp, which is a major national security contractor with the United States government, which charged billions and billions for overseas military training and police training. And this is just another example of, I'm trying to bring you the proof. This is another example of the elite Wall Street bankster gangsters forcing the middle class, you, me, forcing us to rent and not create wealth and financial freedom for ourselves, and making it extremely difficult when half of our income has to go to our housing. Only about 20 to 30% maximum should go to cover our housing. Okay, it's getting really expensive, and not to mention groceries and gasoline and everything else that's going up like crazy. So we do need to find a way to regulate corporate America before they own all the properties in America, guys. So anyways, I wanted to share this information with you. Just came in. Hope everyone's doing great. We'll talk next time. See ya.